Hi everyone, happy Monday. Today is Monday, February 1st, 2021. Welcome to my Monday market commentary. To begin this commentary, let's recap what happened last week. Quite a bit happened last week. To begin, markets. All three major indexes were down over 3% for the week. The Dow, the S&P, and the Nasdaq. There was a lot of volatility in the markets last week. But what gets more talked about as of last week was what happened with Gamestop and with the hedge funds and with Robinhood. You know, Gamestop stock rose quite a bit because of specific traders in the Robinhood app and on Reddit message boards. That affected hedge funds. If you want to get my 2 cents on this, I have a podcast episode that I made last week about this. I'm going to include that link to that podcast episode below. So if you want to take 5 minutes out of your day, I share with you my 2 cents on that below. So let's talk about this week. What should we expect this week as investors, as retirees, as pre-retirees? I personally do feel that we're going to continue to see volatility in the markets. We saw it last week. I think it'll continue this week. On top of that, my 2 cents and from the indicators that I see on my screens are telling me that we may have a market correction on our hands. And what a market correction is when the market pulls back by a specific percentage or more. The average norm is about 10%. When the market pulls back by 10% or more, that's a market correction. But that's what I want to share with you today's Monday market commentary is corrections. How often do they happen? You know, I had some clients ask me last week, should I be concerned or should I begin to be concerned because the markets are pulling back? Not so much the case. Let's talk about that real quick. And this is from First Trust Portfolios. There's about 4 different market corrections that typically happen in history. A 5% market correction, a 10% market correction, a 15, and a 20. Let's talk about the first two. Let's talk about a 5% and a 10% market correction. The 5% market corrections happen about 3 times a year. They're part of the market cycle. We should expect them as investors that, hey, markets will pull back at certain points of the year. Perfectly normal. Let's talk about the 10% market correction. It happens about every 16 months or so. That's a normal part of the market too as well. We see these from time to time. They're not out of the ordinary. In fact, they're pretty much part of the pattern. Hey, every 16 months or so, we should expect a 10% pullback. Where the 15 and 20% market corrections come into place is those don't happen as often. It happens every 3 to 5 years, those types of corrections. We had all of them last year with the coronavirus. So hopefully, if history is telling us correctly, maybe we have a few more years before those happen. Of course, no one knows, but as history shows, they happen about every 3 to 5 years. But in this Monday market commentary, I just want to share with you how common market corrections are. They happen on average 3 times a year. That's if they pull back by 5%, or a 10% market pullback correction happens about every 16 months or so. So they're part of the market cycle as investors. We should anticipate them. We should expect them from time to time. Nothing out of the ordinary. It's part of the pattern. If you have any questions, please feel free to reach out. I look forward to talking to you soon. Have a great start to your week and take care. Have a good one. Bye-bye.